Hello, everybody. Good morning, good afternoon, good evening in some parts of the world. Hope everybody had a great weekend and is getting ready for another fun week of trading. Uh, let's get right to it. Hang on one second and let me just do a new screen share. All right, I want to get right to, hang on, okay. I want to get right to trade. I just did a classic AT trade, and I may be getting ready to put it on again. Market is very, very jumpy. I want to see the housing market index came in. Hold on a second. Came in a little bit better than expected. I want to let this market settle a little bit right this second, but I did have a great trade. Very, very easy. 15-minute chart. Stop just where'd the trade come on? 45, 41, 45, kind of right about in this area. And I'm kind of looking at it at again right now. Here's the 15-minute chart short. Okay. And if we just open it up a little bit so you can see clearly where the trade was, my trade was right in this area. We had the high for the low. We had the first attempt back up here. I finally got patient. I was in early in the morning, and things just weren't happening. I was in two trades, both in the S&P short. So I just kind of cut him short because nothing was really happening. I was in them for a while, and I was waiting for the market to, to get a little bit more active. And so what did we have? We had this first move right back up to the high before the low. That's an excellent opportunity to short, put on a short. 7.89 lots based on our risk management. I risked, 250 to make around 270. I made my 270 right here. We had a stop of 41.4904, okay, which was above, hang on a second. 1 second. 41.4904. And well, you can see the little stop remaining. Okay. And as sometimes you'll notice on your MT4 charts when you do put a trade in, you have this residual area where, so this was my stop, take profit, entry, take profit. And I was in the trade for a whole 7 minutes. So what do we have? We have what's going on. We had the high of the day in, we set a move down, a retracement higher, right? Which we like to see. Created our directional indicator, even though we generally like these to be closer together. Nevertheless, we did have a directional indicator. And then we had another move down, which was excellent. Broke through, we started to form a low. Okay, but one line we know does not commit to a low. So we were looking for another area to get in. This is kind of what I was talking about before. I was in this area. And it just, it was coming down, it just wasn't breaking through. So I cut my losses, and then it did break through, which was fine. Set a new low for the time being. And this is not even a confirmed low right now. It's only one line. And when you break a red line to set a new red line as a low, you gotta, this is not set in stone, this red line. I'm still very bearish on this pair. And so why? And I should have, and I didn't. I could have put that exact same trade on that I had, and I would have already been in and made my money again. And I was actually getting ready for the webinar, no excuses. I was getting ready for the webinar, and I was being a little bit greedy. I was watching this candle right here. This is the candle we're in right now, which is just kind of coming down. I was watching this candle right here, and I was being greedy because I had gotten in over here the first time, and I was waiting to get in a little bit higher up here the second time, second bite at the apple. I was not as comfortable. We talk about A trades, A plus trades, B trades, we do all variety of trades, some are better than the others. So to me, once you have a high, new low, your first time up, your first attempt coming up close to that old previous high, that key previous line, that's the time I like to short. Okay. I got in very easy, made my money, and literally was a 7-minute trade. Now, Second time up, boy, I'm tempted. And I was tempted. I was just being, I was just being greedy, greedy. I was just being cautious. Let's just say, had my profit in for the day, on the one trade. Second bite of the apple, I wanted to be a little bit surer, more comfortable up here that this was going to hold on the second time. And sure, it did. Could have had the same trade anywhere up in this area, stop above here, you would have had your take profit already. So I could have been in again, and this still looks like it wants to go low. And if you look at let's take a look at longer term charts just to see what's going on. Here we are. We set a high on Friday, big come down, came back up on Friday, which, all right. So we saw that set Friday, big move down after economic news Friday morning. And then grinded back up higher as far as the day, as far as Friday was concerned. We got off to just a kind of a consolidating start. We put in a little high here, came down, came back up. This is our directional indicator on the 1 hour chart, right? Excellent. And it's still pointing down, and you still have room, and you could put on a trade even right now off of a 1 hour chart, but I'm not going to do it. I'm going to look for something a little bit, again, I don't like to chase down here. I want the better entry. Let me get rid of this. Okay, you can put a short on right now, stop above this line, very, very easily. You take profit somewhere down in this area. I like to, I don't like to, this is a little bit of a chase over here. That's it. The better trade was obviously closer up here, little bit of a chase. It's 10:07. So what did we have? So now we have an unconfirmed line in on the 1 hour chart. So what does that mean? So that means at 11 o'clock, all right, if we have not set a new low between now and 11 o'clock, this line will confirm. And that would be an important indicator for us, not necessarily the low of the day. One line never confirms for us a low or a high of a day. We must have at least a directional indicator. Here we have a directional indicator at the high. Your bias has to be short right now. We don't even have a low confirmed, not even an unconfirmed. We have one unconfirmed line. So this is on the 1 hour chart. So if you look at this 1 hour chart, what are you saying to yourself? Bias is short right now. And if you wanted to use the 1 hour chart for an entry, your stop goes above here. Now, I'm not going to do it because I like to trade off this shorter time frames in a little bit, but this is a very valid trade. Okay, right here. Very, very valid trade. Just that the S&Ps have been very, very choppy. So I'm just going to be a little patient at 10 after 10, but I'm very possibly going to be looking to get into this trade again. Okay, so this is a very viable trade. Why is that? Okay, because you stop above the high of the day, which is excellent. You have your directional indicator in. You have plenty of room down. You have your take profit set that you can take before you have to take out a red line. So this is actually a very nice trade. Anybody out there, who wants to trade off of a 1 hour chart, this is a very decent trade. I should have been in it. The idea was to be in it up here. So that's the 1 hour chart. Just look ahead. Look at the 4 hour. Are we coming into any resistance that we should know about? So here's the 4 hour chart. And the answer is no. Look again, directional indicator. All right. So, there's a good chance. Now we have a directional indicator on the 4 hour chart heading down and on the 1 hour chart heading down. All right. All we have is an unconfirmed line here. So that's nothing to worry about. You really have, now let's be cautious here. Okay. Let's remember previous lines. Okay. Now, what are the previous line here? Where is the previous line? Okay. That's very important. And where is it? Is it this line? No. Why not? Because this line comes from a candle that's after the high. Remember, a preceding line on a move up, all right, is the low before the high. The last low before the high is right here. And how do you figure that out? Well, look, here's your high, and here's your next high, right? Here's a high, here's your next high. All right. where is the low point between the two? Right here. This is the low before this high. All right. You may think it's this point right here. Okay. That may be a first target for you to be looking at and saying, hey, is that an important line? At least it's a preceding line. I'll give you that. Remember, these are the subtleties. It's a preceding line. So clearly that's better than this line. Okay. However, this is not the low before the high. This is the low before the high. And that's so you have to be able to recognize the difference. Okay. We set a new high off of this low, not off of here. This is the low. Very, very important that you guys kind of get that. Okay. By the way, feel free to ask any questions if you like. So this is now the 4-hour chart. Okay. So we have a directional indicator. Again, we're not trading off the 4-hour. All right. But we have a directional indicator, and my bias is now would be a short for the 4-hour. So that's what I'm looking for. So now I'm going to drill down again. Okay. So my 4 hours kind of giving me, I got a little short bias. Remember not trading on. This is how you analyze a chart. The 1 hour, we definitely have a short bias. All right. Clearly. Question is, where do you get in? Well, you can get in on the 1 hour, put your stop above here. And like I showed you before, you know what? I'm not ready to do that yet. Let's go to the 15-minute because I want to see what's happening on the 15-minute. So this was the area. Okay, now let's take a look. This is why you can't get in. So now I want to get in the trade, but the trade to get in was up here. Okay, because you have to put your stop above here. And to get all the way to get your take profit from down here. And again, this is why, timing is everything. Okay. So to get your take profit, now I still like being short. Okay. But to get my take profit, you got to come down here, which is very, very doable. Don't get me wrong. It's very doable. We do have a line right here. We do have a red line. Now it's only one red line. So we're not saying that the low is in. As a matter of fact, I think it's more likely than that the low is not in right this second. Okay. And my bias is still short. But to look for a trade right now to go short, the place to go short was in here somewhere. Okay. Now that we're already down here, you got to be concerned that this line won't get taken out. So you would be risking more than, your obviously achievable gain. Now you could take out this low. Okay. There's no question you could take out this low. So, however, the better trade is up here so that you can get out before you have to take out that low. Okay. Now this is at least on the 15-minute chart. Okay. If you want to go back to the hour chart. All right. For those of you, here's a trade. Right, okay, right here. I am not doing it right this second. Okay, but here's the trade. Trade above here. All right, because this is the high of the day. And you know what? And if you get taken out, you get taken out. If this ends up not being the high of the day, you get taken out. But right now, high of the day, directional indicator. We don't even have a confirmed line over here. So your next confirmed line is all the way down here. Now, once again, let's look again. Okay, this is very critical. Where's the high before the low here? Where is the real target here? All right, now think about this because this is very, very important. You can use this move up and I can target this. Okay, but what do we really have? Okay, the real low before the high. Now remember, here's the high, right? Previous lines, okay, are going to go back before the high. Now, yes, this is a high of this move, okay, but this is the high. So it's anything, all we have now is a move down and a retracement back up, which is very normal, okay? Put in a high, big move down, retracement back up. And then today putting in 2 new highs for today or the high for today. That's very, very normal activity. Okay. These are targets, but these are not key. These are not as key lines to me. Why? Because You did not set a new high off of either one of these lines, right? It came up here and stopped short. So when you're looking at this move, now look at the move. Up, retrace, up, consolidation, up, okay? So where's your low before the high? Here's your high. Here's your next high. Where's the low between the 2 points? Right down here. So we have all of this distance to get down, okay? And then for those of you who like to use a Fibonacci, just to give you an idea on where it could go, if this is the move that we're going to be looking at, all right? These are areas that we got to be careful, okay? That you're going to be breaking, okay? So here's your 38.2 retracement, okay? Actually, what I would do here is I wouldn't even work off of this one because we already took that out. So hang on a second. Let me change this for 1 second. Hang on. Okay. You know, Fibonacci would already be in. Really, the place to run a Fibonacci in this move is off of this line, down, retracement up, came back up here pretty high, even took out to 61.8. Okay. So right now we're consolidating. Where are we? 41.43. So right now we're consolidating. All right. I still have a short bias. Let me get rid of the Fibonacci. But I don't have, I have excuse me. I have a short bias, but I don't have an entry right this second. Okay. So I'm certainly not going long right now. Here's the 1 hour chart. I am not going long. By the way, any questions? Let me just do a quick look. No questions. Okay. Anybody has any questions about what I'm talking about? If they have another currency out there or another instrument that they want me to take a quick look at. But right now, I'm just doing the S&P because, like I said, I had already made one trade. It was just a classic AT trade that I showed you before off of the 15-minute chart. All right, it's one of my favorite trades. Really very simple. I want to make sure you understand that we had a high, we set a new low. Okay, the first attempt at that previous key line. Okay, if you're going back up, a short opportunity. If it's happening going down, a long opportunity. First attempt. Second attempt, you would have had the same trade and you would have made it. But now you got to start to get a little bit more cautious. See, to me, I look at it as every time you make an attempt, boom, you chip away a little bit, and you come back down, okay, it held. You come back up, boom, you're chipping away a little bit. So each time you make an attempt at a line like this, I'm getting a little concerned. Okay, so this is why I'm not in a trade right now. And right now we're just in a consolidation period. I still have a short bias, but we're in a consolidation period. It's 10:18, so right now there's nothing to do. But as you can see, I had a great amazing trade. Very simple. I was in the trade. I got in at 9:38. I got out at 9:45. 7 minutes into the trade. Never in doubt. Took my full profit. As a matter of fact, hang on a second. Now let's see, it's coming back up again. Hang on. Okay. I am, I'm still tempted. Let's just see what's going on around the rest of the market. Okay. I want to see, I keep a lot of charts up, as you can see, as a base. And just, if you can't really see them on your screen, let me give them to you quickly. I always have dollar index. Okay, you got to see where the dollar index is. And right now, the dollar is gaining strength. And not only that, yields are rising today in a pretty big way. Okay, the two-year and the 10-year are both pretty high, both up about 1.5%, both of those yields. And therefore, the dollar is gaining strength. And as you can see, the dollar is gaining strength here. Dollar yen moving higher. Euro dollar moving lower now, sterling dollar moving lower. So you can see all of that. Okay. Now down here I have NASDAQ, and then I have S&P, and then I have the Russell 2000, which was really, really wacky today. And then over here I have gold. I watch gold and silver. I do trade a lot gold. I do very much enjoy trading gold. I am very bullish very bullish in general in gold and silver. Let's just take a look at gold. I am extremely bullish on gold, not right this second, but I am extremely bullish on gold, and gold's something that we're going to be looking. I'm going to personally be looking at trading long over the foreseeable future. Okay, hang on a second. Bear with me. Hang on a second. Sorry, guys. Just give me 1 second. Just checking the chat. Jay, I'm not sure. Hold on. How tight a stop do you use on the first bounce against a preceding line? I'll see your directional indicator, 15-minute euro dollar. I'll get to that. All right, hold on a second. What happened here? What happened here? Hang on. Hang on. Sorry, guys. Where are we? Oh, anyway, I'll get back. One sec. Okay. 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 How tight of a stop do you use? So let me answer that question. I have a question here. How tight of a stop do you use on that first bounce against the preceding line? It's just let's just take a look. He was the 15. Well, hold on, this is gold. Here's the S&P. I don't look at it in points. I just kind of give it a little room. I don't look at it in points. I give it, it's a visual distance. Okay, I don't put it right on top, because remember, this is something remember this. Okay, very important for those of you who've been trading that are always really, really careful. You want to try and get the best pip, the last pip, or risk the least amount of pips. Okay, if you're using our formula, please remember, it's not the amount of pips that you're risking, it's the percentage of your account that you're risking. Okay, this is very, very important, because why you don't have to be so tight, because let's say you give it an extra couple of points, okay, in your stop, it's the same dollar risk. You're giving yourself a little bit more of a cushion, but you're not risking any more money. All right. So give yourself a little room to let a candle poke its head through, and maybe do a little quick looking for a stop of a couple of pips on some people. Okay. Don't get caught up in that, because you're risking the same amount of money. So give yourself a little bit more room. Now, when you give yourself a little bit more room, what does that cost you? Well, the only thing it costs you is that if you're trying to get your 1-to-1 or your 1.25-to-1 or 1.125-to-1 risk reward ratio, all right, if you give yourself a little bit more room in a stop, it just means you're going to have to go a little further in your take profit. That's all. All right. I would rather give myself a little bit more room in the stop so that I don't get taken out by a false break of a line, and then have to go a little bit further on my take profit. Because if I'm right in my theory, and if that important line that I'm using for my stop holds, or even within a pip or two, basically holds, okay, then on the way back down, if that holds, then having to go an extra couple of pips to get your take profit is probably not going to hurt you in the long run. Okay, if you made the right move, if the instrument is trading the way you anticipated it trading, if the lines hold the way you thought that they were going to hold, even if you give it a little bit more room, then the position starts to move into your favor. Okay, that's where it becomes very important. But as long as your take profit is still reasonable, then I like to give myself a little bit more room. Like I wouldn't, if this line is 40, let's take a look at it. 41, 48, 22. I mean, I'm not going to go 41, 49. All right. I'm not going to go 41, 49. I'm not going to go 41, 50. Give it a little room. Where would a little room? Let's just see. Above 40. Yeah, so here's 4150 right here. This is 4150. And you can go, kind of right around here. Honestly, when you have a directional indicator like this, and you have the high at the day here, I'd probably put it somewhere right around here. Nah, a little lower than that. A little lower than that. I don't have trouble. Just somewhere right around here. Okay. Because it's not important to sit right on the line or be so close. That's the most important thing that you have to understand when you're using arrow lines. Because if I'm right, if this line does hold, I mean, if it pokes its head above here, I don't want to get taken out because if it otherwise holds, it's going to make a move down here again. And then I should be able to get out of my position. Let's just see. Let's get rid of something here. And we're going to go look for some other trades possibly. Let's just see. So let's just get rid of that for a second. And if I put on a sell, stop loss even above here. Time is at 1026. This is probably still a pretty good trade right here. Let me just see what the rest of the candles are doing. I want to see what happens at 1030. Okay. We're setting we have a directional indicator up here on the dollar yen. These markets are just very, very whippy. All right. So I'm being very careful. I still like a short. I just like to. I'm just want to wait on this candle over here. Okay. This is the 15-minute chart. Okay. Once again, the only reason why I'm hesitating, and this is a subtlety, guys, okay, is the only reason why I'm hesitating is that if this was this first attempt at this line, okay, then I would be sure I would be out. All right, as I would be in the trade. All right, but it's not. It's now the third attempt at the line. And you know what? Like I say, each time it's a little chip. So it's being pretty, it's pretty feisty over here, I would call it. So that's the only reason why I am not jumping into this trade right this second. Just want you to know it because it's the third time around. And I also see the Russell 2000 is very strong right here. See how we're closing? This is why I was wanted to be careful. When you look at the Russell 2000, okay, about to set a new high for the day, Russell 2000. So that's concerning. Is the Nasdaq is weaker? See this line. Let's just watch this for a second, guys, because this is just a good education. But also, what's important here is watching how candles close. There's no reason for me to put on a trade at 1028 when I'm looking at a 15-minute chart. I like to see how a candle closes. Algos in the marketplace react on candle closes in general. Not always, and not specifically, but a lot of algos, they wait for the candle to close, and you'd be surprised that there are algos that kind of push the market, believe it or not, in a direction to try and get it to close in a certain area. So let's see if there are any questions, and then we're going to get on to some other stuff. Okay, no other questions for right now. Okay, still holding. 1029, 20 seconds, candle close. Yeah, still holding. Still got to have a short bias. I just, here it is. But now, what you have, see what happens if you're watching, okay? Now you take profit. You have to take the low out. Up here, you can get in and get out, even in this consolidation period. So right now we're consolidating. We're kind of smack in the middle. What do we have here? We have a little directional indicator on the bottom on the 15-minute, but we also have lines pushing down on the top. So we're in a, just a little consolidation period right this second. And that just goes to show you, if you look at the indexes, things are just very, very flat in general. Okay. NASDAQ is the weakest of anything. But at least for right this second, the market's confused. The market really is confused. There is no direction for right now. We're going to have to make a direction. But right now, see, nothing's happening. So there's nothing to do. All right. Once again, the two trades, and they both would have worked out, by the way. I was in the euro early off of where was I in? The big one I was in at 41.40. I did 41.43.29, and I had a good chance to get out, and I didn't. That was kind of back in here. You see what's going on, guys? Just consolidating. But we don't, now here you could actually, maybe get into a little scalping range. Good point, Jay. By the way, as I mentioned before, the yields are rising today, very strong. The two year is up over 2%. The 10-year is up almost. It's 1.75%, and that's not a good sign. Well, depending on what you're doing and what you're trading. So look, as you can see, there's nothing going on right here, right now. Very consolidating market. But here was your lesson for the day, okay? And sometimes it depends on what time of the day you get here. If you were here early this morning, online, kind of the European hours, you had an opportunity to get in at the high and get out with a move down into this area. I got here later in the day, so I had this move down, the retracement up, and I was able to get in up here for the next move down. And let's just see what's doing here. Time is at 10:32. Let's just see what the rest of the indexes are doing. Russell 2000. Boy, I'm itching to get into the S&P, but I don't really want to, the Russell's pushing up. NASDAQ looks like it wants to push higher. Markets have been grinding. 41.45 seems to be, big sticking area over here. And the markets are just not moving. So any questions from anybody right this second? Euro is very weak. Sterling is very weak. Look at the dollar index. Dollar. Look how strong dollar index is today. Okay. Here is the 5-minute today on the dollar index. 15-minute dollar index. So here's dollar strength. Now, obviously we don't trade the dollar index, but you can't be looking for a short. You can't be looking to go short dollars right now. All right. So this gives you your first indication. All right. So then you're going to go find a pair that you can trade against it. And you see where you're at. And right now we're at daily lows, just about on the euro and just about on the sterling. You got to take here, look at the S&P. And the S&P. See, guys, sometimes, it's holding. It's holding, it's holding. Damn. All right. It's definitely holding. Let's just take a look at the euro. I just can't buy on the let's take a look at the euro. Very, very weak. Very weak today. So let's just expand it. So 5 minutes, we're at session lows. 15, we're at session lows. But we need an entry. right? There's no entry. See, if you take a look at this, you know, you're guessing that you're going to take out the low. Yeah, okay. An entry would be this would be the line right here. Stop above 109.35. So if you can kind of get up and back up into the area, maybe short about 109.30 area. Let's just take a look. See, you can't go short down here. Let's see euro. Sterling moving up a little bit too. Guys, mixed markets right now. Any questions? Anybody? No questions. Okay. Well, if you follow the AT trades, this is as easy as it gets. Okay. This trade that I did earlier this morning, like I said, I was in the trade for 7 minutes. As easy it gets. You just have to believe. Okay. You have to believe, you have to have confidence that we play retracements. Okay. What I mean by that is we don't chase getting into a trade on something that's moving in one direction. Even if we have a bias of it moving in one direction, like let's talk about the S&P, my bias is short. So even if you have that bias, okay, you still have to wait for the right trade opportunity to get in. But I'm certainly not going long S&Ps. We're in the middle of a total consolidation here. I'm still biased short for every reason I told you. So that's my bias. My bias is short S&Ps. If you look at euro, looks like it wants to break down. Okay, euro's at session lows. NASDAQ is coming down towards session lows. What else is going on? Dollar's about to break into session highs. We just don't chase. Wait for a setup. $15-minute S&P. On a short right now, where do you put it? You put it above the high before the low, I'm sorry, I'm just responding to a question that I'm receiving and I here it is. Here's my setup. I just didn't execute the trade. If you can see, I have the setup right here on the 15-minute, and here it's coming down. It's holding. The stop was above here. Okay, the idea was to get in over here. Unfortunately, see, now we're breaking down. So there was the trade, and I should have been in it a second time, but I was being cautious. About to set a session low right now. Okay. And here it was, guys. And have faith in the amazing trade lines. I should have had my own self a little bit more faith. All right. And like I said, only because I had already made my money the first time. And it's kind of like it's tough for me. It's tough for me to make money in one direction, have it come back, and get on the same trade. It's a difficult thing for me. It's like I don't want to be greedy. I'm looking for a better opportunity the next time. I got my money, made 0.25%. If I can make 0.25% every day, by the way, how good am I? Okay, 0.25% every day, 1.25% a week. Excuse me, 50 weeks. Okay, here's your 50% profit. Do $100,000 account, there's $50,000. Okay, you don't have to be a hero. You don't have to make huge money every day. We get up every day and we come to the plate and we're looking to hit line drive singles up the middle. That's what we're doing. We don't swing for the fences. Okay. Although to be honest with you, when I don't swing to the fences, the trade that I had on before happened so fast that I was actually going to take most of it off and leave some because I still think it's going to drop again. but we don't swing for the fences. But that's something else you're going to learn. See, down the road, when you have an area like this, okay, where you have a wide open room, right? When you have a clear bias on the 4-hour chart, the 1-hour chart, and 15-minute chart, and you have room down here. See, now if this breaks through, now if I were short and this thing really broke through, all right, I would have a tendency, all right, or certainly an opportunity to try and run this a little longer than where my stop loss would have been. Okay, so when you have the 4-hour in your direction, the 1-hour in your direction, the 15-minute in your direction, you get a good entry on a trade and you're going in the right direction, then you have clear sailing in front of you, meaning that if you're short, you don't have any red lines, you don't have a key preceding line. If you're long, you don't have a key preceding blue line. All right, those are trades sometimes when you get good at this, and when you have confidence in your trading and when you're making money, that's the time when we can look to turn a 1 1/8 to 1 risk reward ratio into a 3 to 1 or a 4 to 1 potential on a trade. Okay. But not every trade. We come up looking to hit singles. All right. But if the opportunity presents itself clearly, okay. Now we don't take chances. If I'll use baseball analogies. Okay. We don't try and stretch a single into a double unless we have clear sailing to make it. Doesn't mean you're going to make it, but you don't take chances, okay, of turning a single into a double. So we get up, all right, we're looking to hit line drives, make contact up the middle and get our singles, okay? Single, 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 single. We're great. A lot of money to be made. And here comes the S&P down. So I was too cautious. I once again should have and could have put the trade on, and take profit would have been hit at this point. Lesson for me too. I just hate making the third or the fourth attempt at a preceding line. But in this case, it helped. And so he is an amazing trader working. I just didn't, just trading's hard, guys. Okay, it's as simple as that. Trading's hard. I took my money. I didn't want to be greedy. Now let's see what's going on. Oh, NASDAQ setting new lows. Of course, NASDAQ setting new lows. Now, let's just see. Which doesn't surprise me at all. When yields are flying, okay, that's bad for NASDAQ. So NASDAQ's now down 0.5%. And so interestingly enough, just to show you, oh man, look at, here goes the S&P. Damn. Could have had a monstrous day. Have to now find another trade. So now I'm aggravated. NASDAQ, S&P down to 41.35. Gold is dropping like we talked about. I'm sorry, I'm very bullish on gold. Let me back up a second. I am extremely bullish on gold. However, gold has had a massive run. So I am looking and expecting a pullback. I'm not going short gold. I can't do it. Here's gold. Let's just take a look. Gold just had a massive move up. So here we go. We're actually getting pretty close. Let's just take a look at the 4-hour chart on gold. Let's just get a sense of where we are. Okay, we're coming actually close to kind of a pretty key area. All right. 1981 is key. We're at 1986 on 1987. This 1981 area is a key area. Okay, we made a high right up here. We're traced down to here, made a new high. As soon as we made that new high, that made this line the key preceding line. Just so you know, just try and understand this. Just look at this, okay? All right. Until this line was set, but until we made a new high, until we took out this high, this was not the key preceding line. So when you're in this area over here, even here, okay, the key preceding line is not here, all right, because we had not yet taken out this high. This only became the key preceding line once we took out the high. That moved the key preceding line to here. Okay. Before that, all right, the key preceding line, believe it or not, was, wow, you really almost have to go here, here, really here. Okay. We have a move up, move down. All right. Then we started to move up. The new high doesn't come in over here. All right. So this is the previous low. Excuse me. This is the previous low before the high. So do you understand that? Okay. Well, why the low between the, okay? Because here is the high on this move. Okay. Excuse me. Here's the high. Here was the high. What's the low point? Well, it actually was here, but those lines disappeared a long time ago. Okay. So we had this move up. We started fresh here and moved up here. That makes sense. So here's a 4-hour chart on gold. I'm waiting for it to come down. Here's the 4-hour. So see the 1 hour. 1 hour is powering right down. So there's a clear profit taking retracement going on gold. Gold had a huge move up. Gold's down 1% today. Silver's down 2%. Both of those have had very, very, very big, strong moves up. And there's no question that we're anticipating some profit taking. So I am not looking to go long. Excuse me. I am not looking. I'm certainly not looking. I'm not looking to go short. Look at this chart. Okay, I have a very big bias on gold, long and silver. And so what I'm going to do to play these is I'm going to wait to get a better area and go long. And that might not be today. Okay, where are we here? It might not be today. We had a low here, 1980. Right. Well, here's the 1981 spot we were talking about. Hold on, it's powering down. Yeah. Okay. We're right on the, okay. Powering down here. Look at this. This is interesting. They're really selling off gold today because yields are rising so big. So you got to keep that in mind. Okay, so then here's a 4-hour chart. You have to go here. 1943. This may not be in a bad area, guys. Yields are flying them. Okay. So let's just take a look at this. So now how would you play this? All right. If you look, okay, I don't want to say we agree, okay, but I can't go short. All right. I have a very big bias to go long, and I just think we're in a big retracement. Okay. So now how would you play this? So I'm showing you the 4-hour chart. All right. So here's the 4-hour. And we are literally coming down to the previous low before the high. We really kind of just came down and we touched it, that 1981 area that we talked about, 1980, 81, and we're bouncing off of it. So if you wanted to trade this to the long side, okay, you can trade it off the 4-hour chart and you can put a stop below here and go long. And because today is Monday and we have the full week to play, you can have an opportunity, but I'm just not doing it so quickly, okay? Because we set that high last week. Okay, remember, this is last week, and we're coming off of it. Now, if you want to go long, which is what I'm going to be looking to do, all right, you got to now say to yourself, okay, so here's the 4-hour. You came down to a key area. All right. Now, do you want to just jump in long right here off of these two big candles? I don't want to jump in yet, but I would be looking for a sign on the shorter term time frame before I would jump in. So I'm going to wait for a time. Okay, so that's how I'm going to be playing this. Okay, I may look to go long today on gold, but I am going to be waiting. Just look at the 5-minute. I know Jay likes 5 minutes. I say, I know we're on the 4. By the way, listen, this is a good lesson in a couple of areas, right? So what can we learn from what's going on here? Okay, by looking at these charts, very important. If you look at the 15-minute, the 5-minute chart, it's pounding down, right? So you're so tempted to get on that to go short, aren't you? I mean, look how it's pounding down. You want to get short that. All right. Look at the that's the 5 minute. This is gold. Remember, this is gold we're looking at. Now we're looking at the 15 minute. I mean, it's pounding down. You want to get short, right? And this is where a lot of people, okay, a lot of traders, especially shorter term traders, all right, they're not looking around the corner to see what's ahead of them. Okay, so if I'm looking at gold right now and I'm looking at the 5 minute, the 15 minute, and they're pounding down, and you're so tempted to jump on short on gold being short here, and I can understand that temptation on gold being short. But when you look around the corner and you get to the 4 hour chart and you see you're coming down to a key preceding line. All right. So, if you're looking at those shorter term time frames and you want to go short and you're not looking at what's around the corner, okay, what's around the corner on the 4 hour chart is a major, major resistance at 1981. And we bounced right off of that. Or excuse me, major support. And we bounced right off of that. So this is a lesson a couple of ways. The lesson is that if you're looking at the fives and you're looking at the 15-minute charts on gold, and you see them powering down. And by the way, on any chart, if you're looking at a 5 minute, or if you're looking at a 15, and you see them powering in one direction and building, that's exciting. That's good. Okay. That's your first step. It's like, oh, look at these ladders building or descending. You're looking for that. However, you also have to look around the corner because everything retraces. And then, there's no reason why that move that's currently happening can't stop and then pivot and go back the other way. So you got to look around the corner. So when you see at gold, let's go back, 5 minute chart, and look what's happening. And this is it in a nutshell. Okay. When you see this 5 minute chart pounding down, you're so tempted to jump on this, right? Well, I don't want to say I'm not telling anybody out there. Okay. I'm not accusing anybody out there of being tempted, but a typical retail trader is going to try and jump on this. Now, you know what? When we were up in this area, that was great to do. But we had to look around the corner and we said to ourselves, whoa, 1981 and change is a key line on a 4 hour chart. So I am not going to go short at 1982 or 1983, right? When 1981 and change is a key. So no matter how short this looks, okay, no matter how powerful this line down moves, this move down looks, okay, once you're down here already, I guarantee you got people going short. All right, they're hopping on, they're going short, and you know what? Maybe they'll break through. I don't know, but the odds, which is what we're looking for, all right, the odds are not in your favor. Okay, so now what I would be looking for when I come down. So you can look at, again, you can look at this in two ways, both ways. So here's your lesson. Your lesson is you don't jump on a 5 minute ladder or a 15-minute ladder in either direction, all right, until you look at a longer term chart, okay, longer time frame chart to see if that open area where it looks wide open to you, that it looks like there's nothing in front of you, but boom, you're going to come around the corner into a roadblock, and you need to know that. So 5 minute charts, 15-minute charts to get into a trade, okay? Get on a ladder, that's what we're looking to do, but you have to make sure that that ladder has room to run on the longer time frames, okay? Otherwise, you're just getting in at a bad spot, okay? Which is very, very important to know. So we're looking at it from this way. So now let's go back, and this is just how you analyze any chart, guys. Okay, so now I'm looking back, going back. Okay, so we did gold and the S&P today. So now I'm looking back and I'm going to myself, my bias. I mean, look at this move up in gold. Your bias has to be strong, but we know. Look, you get pullbacks. Okay, and sometimes big pullbacks. And if you know what, so if you're not in at the right place, it's very easy to have a bias on being on gold and look at this chart. And then I could turn to you and how'd you do on it? Well, you lost money. You wanted to be long gold, okay? And here's your chart, and somehow people still lose money. Why? Because they get in chasing up here, okay, for instance, chasing this move for it to reverse and come down, and they'll get stopped out. All right, they chase the move, And depending on where you get in, it reverses against you. They get scared and they get chopped out. Okay? Typical retail trader. Hold on a second. See what else. Oil is crashing. Rumor has it, oil is crashing. Well, you know what? Oil's crashing. Yeah, it's down almost 1% oil. But yeah, you know what? Oil, same thing. Gold, silver, oil. Because why? Because the dollar is on fire right now. Let's just take a look. And here's the dollar index. Okay, guys, what time is it? It's 5 to 11. Any questions? Because I am going to get going. I got some stuff to do. If we would have done a few minutes earlier, you would have caught that trade with me. I'm sorry about that, but that's timing. Okay. Let's just take a look at the S&P again. Boy. Here we go. Took out the, see, it's very important. Okay. See how we took out that low? Okay. Daily low was one line. We never had a directional indicator. Right. And now we took out and we set a new low on the S&P. Never in doubt. My mistake. Should have been in the trade up here. Guys, learn from my mistake. It's all about confidence. Okay. I was trying to be greedy. I don't know to say greedy. I was being too careful. I took a nice profit early. I like to take a breath. I remember I'm not here, my goal every day is not to make tons of money. I mean, it'll be nice. Don't get me wrong. My goal is every day come in, do 3, 4, 5 trades, okay, but at different times, on different things. I don't want to get locked into a particular me. I'm not comfortable getting locked into a particular pair or instrument. So when I do a trade on one, it's hard for me to get back into another trade on that particular pair during that session. So just take a look. But clearly the S&P is holding, moved down. Would have had another trade yet. So this is the best way, guys. Once again, the perfect analysis. This is an A trade. All right. And if you weren't able to watch this video is this is being recorded. Okay. So you can come back if you're not able to see all the lines. You guys are out there, maybe you're just listening. I don't know, and are not following, and you maybe going to want to catch the recording. This will be available on our YouTube channel a couple of hours, within a couple of hours. If you don't have a link to our YouTube channel, just ask us. We'll send you the link. But once again, all right, S&P has been moving up. We have that directional indicator up here. Gave me the bias down for right now. I know we still have room to get down to the key low before the high. So there's still plenty of room down here. And my bias is still short. Looking for a better entry. Here's the 1 hour. Told you the 1 hour is beautiful, right? Showed you put your stop above here, and your take profit will come easily. We're heading back down into this area, guys. We're going to test this area. Okay, 41.38. We're going to go lower than that today. All right, that's it for today. Like I said, the video will be available on our YouTube channel later this afternoon. So if you were not able to visually see what I was talking about with these charts, there you go. Dollar moving up still. Euro is weak. Sterling is weak. S&P is weak. Gold is weak. Okay. So those are your biases for today. So thanks very much. Look for entries. Okay. Unless you see a turnaround, unless you see a good directional indicator. Now remember, these markets, I don't know that there's enough information right now for these markets to power in any one direction. We got a lot of earnings that are coming out now. That's going to be a big key now as we had the bank earnings, the big bank earnings that came in on Friday were important in some light. Okay. But pretty much everybody knew that the big banks were going to be okay. We got a lot of the smaller regional banks coming up this week, which is going to shed a much bigger light on what kind of state the banks are in relative to deposits and their balance sheets. So that's coming up. We also have a lot of the S&P is going to start reporting earnings. So that's coming up. Okay. So, until these earnings start coming out, I think we're kind of going to be in a kind of range bound-ish. So that's also why I'm being, a little careful, get in, get out. It's 11 o'clock right now. I'm gonna let the market settle. Let's see, is there anything else to talk about? Nothing. Directional indicator just showed up on the 15-minute on the euro. I'm going to keep an eye on that. Yes, we have a directional indicator, but let's just take a quick look at this, okay? It's only a 5-minute chart, not the 15 anyway. But hang on. See what the 15 looks like. We don't have it. I would never. No, see, we have a directional indicator on a 5-minute. No way in the world am I going to trade long on a very, very weak tape. Euro is very, very weak today. Dollar is very, very strong. And there is no way in the world that I am going to call the bottom on a 5-minute chart, even with the directional indicator, especially because take a look, okay? Especially because lines are pouring down. Hang on a second. 1 second, we just flashed, okay? So we do have a directional indicator, but look at all the blue lines pouring down, and we don't have a lot of room to get back. So even if I was going to go long, you got to be out by what's this, 109.29. All right, so you got to be out by 109.29 at the latest. And so even if you were to go long here, you just can't do it. And I wouldn't do it on the 5-minute chart anyway against this tape. All right, guys, that's it. Anyway, hold on, let me just do a quick thing. No questions. Okay, thanks, guys. Have a good day. And recording is available about an hour.